Sold shares, property, or gold and wondered whether your profit is short term or long term? Hi,
And welcome to my channel. I am Gayatri, and in this video I'll explain section 2 clause 101 of Income Tax Act 2025. What is short-term capital asset and how to determine holding period for those assets. When a capital asset is held for less than 24 months, that is 730 days before transfer, it is short term. Transfer includes sale, holding a financial asset to maturity, converting a capital asset into stock in trade, relinquishing rights, and lot more. For few capital assets, the period is 12 months, that is 365 days. They are securities listed in recognized stock exchange in India, unit trust of India, unit of equity oriented fund, and zero coupon bond. So what is long term? Anything other than short term. If the asset is held for more than 12 months or 24 months, as the case may be, it becomes long term. How to determine holding period? General rule is to calculate from the date of purchase or acquisition till the date of transfer. But in certain circumstances, holding period do not start from the date the asset is actually received or paid for. This clause specifically provides situations and how to proceed about it. Let's go through. When shares are held in a company which has begun its liquidation process, then the holding period doesn't count the period after the date of liquidation. It is simply excluded. When you receive an asset from someone else through inheritance, a gift, or any other cases, then the starting date is not the date you receive but the date of original acquisition. It includes the time the previous owner held it. In the case of allotment of shares in amalgamated company. So you are holding shares in a company and the company is amalgamating with another company and the shares are allotted in new amalgamated company. In this case, the period held in amalgamating company, that is old company, should also be included. Similarly, in the case of demerger, the period held in demerged company, that is old company, should be included. In this case, there are two concepts called demutualization and corporatization. Corporatization refers to the process of converting from a non-corporate entity like society or AOP into a company incorporated under Companies Act. Demutualization involves the transition from a mutual organization like a non-profit entity to a public company, and it involves segregation of members' rights into ownership rights and trading rights. These trading rights refer to the right of the members to trade on stock exchange, and ownership rights refers to shares. So I'll upload a separate video about this full concept. For the time being, demutualization is just a process where members' rights are segregated into ownership rights and trading rights. So when these trading rights or ownership rights are allotted, acquired by a person, after the demutualization process, the holding period includes the period where the person was a member immediately before the demutualization process. The catch here is that whenever an asset is converted into another form, maintains the capital asset status, and the asset is held by the same person immediately after conversion. Its holding period starts from the original date. Pause the video and read the screen. In the cases where unit of business trust is allotted in place of shares or conversion of preference shares into shares or vice versa, or consolidation of mutual fund schemes or mutual fund plans or even segregation of portfolios, the holding period simply includes the period from the original date. When stock or inventory is converted into a capital asset, then the date of its conversion or treatment as capital asset is considered, and not the date of purchase of that particular stock or inventory. In the case of bonus issue, rights issue, allotment of statutory shares or ESOP, then the holding period is from the date of allotment of the asset and not the date of payment. In case where the right is renounced in favor of another person, then the holding period is from the date of offer of the right. So just quickly recap, the summary sheet is on your screen. Hope this video is useful for you. If there is any doubt or clarification needed, please do leave a comment. Don't forget to like, comment, subscribe to this channel and share this video with your friends. We'll be right back with more similar topics. Thank you.